Sir,
Yes.
sir, try.
Good morning, all of you, once again. And today we are going to talk about the profit and loss account. Profit and loss account starts where the trading account ends. Okay, the trading account is closed with a balancing figure on the debit side. If it is a profit, gross profit. If it is a gross loss, then the balancing figure appears on the credit side. Okay, now what is the meaning of balancing figure appearing on the credit side? The debits are more than the credits. If there's a profit, the credits are more than the debits. I'm talking about the trading account. So if there is a profit and that profit is transferred to the profit and loss account, the profit and loss account begins with the profit and loss account begins with gross profit. Okay, and gross profit, since it is the first item, it should be on the top of the account, right? And after taking the gross profit as to gross profit, okay, brought down, I'm sorry, by gross profit brought down, okay, now then you go on charging all the administrative and selling and distribution expenses. Selling, distribution expenses. Can you just give me a small pause, ma? Yeah, are you still getting the noise, disturbance, surrounding noise? Do you get any noise, surrounding noise? Okay. Yes.
Yes.
No, sir.
So, right. So gross profit, you begin with gross profit by balance brought down. Actually, it should be, because it's gross profit, by gross profit. Okay, that's the first item. Against that, you will charge all these administrative selling expenses. Okay, now when you talk about the expenses, word expenses, if that expense is meant for the benefit of 12 months, then you charge against the profit and loss account. If those expenses are for more than, or the expenditure is for more than 12 months, then you treat it as an asset and you drop it in the balance sheet. Okay, you put in the balance sheet. For example, machinery, it is beyond 12 months, it's an expenditure. Amount paid for machinery purchase is asset. Okay, it is not expense. You cannot charge to the profit and loss account. But if it is purchase of materials, you can charge to the profit and loss account, because materials that you buy today, you will sell in the next month. If not next month, maybe after 2 months, you will sell it. Okay, so profit and loss account should be prepared in such a manner that any person who is reading should be able to understand it. Okay, because most of the shareholders are not accountants. You should prepare in such a way that they understand it easily, and too many details will will confuse the person. So therefore, try to make the presentation of the profit and loss account as far as possible simple and lucid to understand, to be understandable to all the stakeholders. So yeah, so right, if you're beginning with gross loss, then this gross loss is appearing on the debit side. If you're beginning with the gross profit, it appears on the credit side. Okay, and net loss appears on the credit side, and net profit appears on the debit side. Both of them are balancing figures. Okay. Now, if there's a noise, now please mute yourself, all of you, unless you have something to speak. Right. So this is about trading account you're talking, and this you're talking about profit and loss account. Okay. Right. Now there is an idea, there is a practice in the corporate accounting where for each type of expense, you make a schedule. Okay, you prepare schedules to the profit and loss account and balance sheet. But for a sole trader organization, you don't need to do, you don't need to follow all those things. Now, let me tell you some important points while you're preparing the profit and loss account. Now, when you look at drawings are not expenses. So they are to be deducted from the capital. Capital account debit to drawings. It is to be deducted the capital in the profit and loss account. And similarly, income tax. Income tax, okay, income tax is an expense. Therefore, it is debited to the profit and loss account. But if it is a proprietary organization, it should be charged against your own purse, not to the profit and loss account. Proprietary is an individual, so tax is levied on his personal in his income, on his income. So therefore, it is not to be charged to the profit and loss account. Now, discount received and allowed. If it is discount received, debit it to the profit and loss account. Profit and loss account, debit to discount. If it is discount allowed, debit it to profit and loss account. Discount received, credited to the profit and loss account. Okay. Discount received, credited to the profit and loss account. Discount allowed, debited to the profit and loss account. Rebate. Okay. If it is rebate, what is rebate? What discount allowed? We have discussed exhaustively. I'm not speaking much about it. But rebate is a item which you are listening to me from me for the first time. So let me tell you, it is allowance given to a customer when he's purchased during the period, say 1 year, up to a certain figure. Suppose a firm allows a rebate of 4% to those customers who purchase during the year, or at least 5,000, either on or before so and so year, or at least this amount. Okay. So one customer's purchase of 4,500, okay, and when he does it, he will not get any rebate. Another customer purchased total of 5,100 rupees, 5,100, and he gets a rebate of 204. Okay, look at this. If you purchase 5,000 minimum, then you get a rebate of 4%. Okay, you get a rebate of 4%. What is that? Either before a particular stipulated date or at a stipulated sales value, you will get some rebate. It's like discount, but you don't call it discount. For the rebate, there are conditions applied. If you buy at least this percentage, if this value of sales, if this value of goods, only then this rebate is applied or applicable. But when it comes to discount, trade discount, it is different. So flat on whatever you buy, you will get the discount. But rebate is to encourage the sales, to encourage the customers to buy more and more. Rebate is given, or to make them hurry to buy. At the earliest, you will fix a time frame also. So at that time also you get rebate. When the company is giving rebate, what happens? It's a loss. If it is giving discount of a rebate of 204, that is deducted from the invoice value. So this 204 rupees is loss. So what do? Profit and loss account debit to rebate account. Rebate is an expense, therefore it is debited to the profit and loss account. Okay. Now let's talk about bad debts. Now bad debts. Let's say, Ritik Jain is, let's say it's only an example. Ritik, don't worry, okay? And Pawan also, to please don't feel. Now Ritik is, he's a money lender, okay, money lender, and then Bhavani is intending to, Pawan has some money from Bhavani, and Bhavani said, okay, I'll give, and meanwhile, she took the advice of Ritik. Hey, Ritik, Pawan, Joel asked some money. Okay, should I give or not? She took the advice of, let's say, Ritik. Then Ritik said, Are Bhavani, if you gave any money to Joel, that's it, gone case. Okay, you can write in Gandhi's account. right? Gone case. Now, what is this? When a customer does not pay the amount due from him and all the hopes of recovering, Sandeep Bhavani has lost all the hopes of recovering the amount and it is lost. Okay, then that amount is said to be a bad debt. Okay, in Telugu, beautiful word is used, chavu baki, right? Right. So it is a loss to the firm. Therefore, bad debts is to be debited to the profit and loss account. So profit and loss account debit to bad debt, to bad debt. Okay. Next. Now, actually, Pawan Joel, he does whatever money he takes, he doesn't, repay it back. Okay, if you sell goods to him, he will take on credit, but he will not pay it back. Most of the goods sold to him became bad debt. So goods sold on credit became bad debt. But Joel is transformed. He's a born again. Okay, he's converted. So when he is converted, okay, from bad ways to good ways, then what he says, no, Bhavani, I'm changed. Now I have borrowed so and so money. Now I'm paying you back. Joel, is it you who are paying? Yes, it is me. I'm paying, right? I'm changed. Now, this is treated as bad debt by Bhavani, but she's converting that. Okay, this is converted as bad debt, but she's recovering that. She's recovering that. Okay, she's recovering that. And what is that? Bad debts recovered account debit to profit and loss account. When it is bad debt, you are debiting to the profit and loss account. When it is recovered, you're crediting it to the profit and loss account. Now, and sometimes what happens, Bhavani, while she is doing business, out of 10 people to whom she's selling, she may say, okay, at least one fellow of these 10 fellows may be a bad debtor. Okay, so 10% she will 10% she will assume that there may be a bad debt, and for which she makes a provision. She makes a provision. And what is this principle of conservatism? Anticipate the losses. So with that principle, she makes a provision. And what is that provision? She is expecting that there will be 10% bad debt. So this is provision for bad debt. She's making a provision for the future anticipated loss. That's provision for bad debt. So provision for bad debt debit to bad debt account. Okay. Now the same is also loss to the company. Therefore, it is debited to the profit and loss account. Provision for. And last of all, you have closing entries. The entries that have to be made in the journal for preparing trading and profit and loss account is for transferring various accounts to these accounts are known as closing entries. We have seen the entries required for preparing the trading and for transferring the gross profit to the profit and loss account. Now, complete to the profit and loss account under mentioned three entries will be necessary. What are they? A, for items to be debited to the profit and loss account will be debited to various accounts concerned, will be credited. Example, profit and loss account debit to salaries, to rent, to interest, to other expenses. B, items of income or gain such as interest, miscellaneous incomes will be credited to profit and loss account, like discount received, okay, bad debts recovered, okay, they are all credited to profit and loss account. Okay, next, at this stage, number C, C item. At this stage, profit and loss account will show net profit or net loss. Both have to be transferred to the capital account. So whatever profit or loss that you get, that is to be transferred to profit and loss account. Profit and loss account debit to capital account. Now we are coming to the important point. Adjustments and treatments. Okay, all right, look at this. Number one, abnormal loss of inventory. by fire, by accident. Number 2, goods used for other than sale. Number 3, where is number 3? Is goods used for not meant for sale. Number 4, commission. Okay, all these are adjustments, right? So I will just take you to the summary. Yeah, look at this one. Adjustment summary. Adjustment. Okay, yeah, if it is given in the trial balance, what you should do. If it is not given in the trial balance, what you should do. If it is in the trial balance, this is the adjustment that you give. If it is not given in the trial balance, then this is the adjustments that you have to give. Okay, number 1, closing stock.
Excuse me, sir.
Yeah, please.
Sir, when we record every transaction.
Right, closing stock. First item, closing stock. If it is given in the trial balance, then what do? You will take it in the balance sheet asset side. Okay, if it is given in the trial balance, you will take it in the balance sheet asset side as stock. In the balance sheet, remember, only closing stock is taken, not the opening. Because when you're preparing balance sheet, you prepare balance sheet on the last day of the accounting period. So therefore, last day, whatever is the stock available, that stock you take. Therefore, it is a closing stock. For example, if this closing stock is not available, it is not given in the trial balance, what do? It is outside the trial balance. What do? You will take it on the credit side of the trading account, just below the sales, and simultaneously you will also take it in the asset side of the balance sheet. Clear? No doubt. Okay. Number 2, outstanding expenses. You have to listen to this table, listen to me and look at the table carefully. If you know this table, if you understand this table, any doubt in the problem should clarify. Outstanding expenses. Balance sheet liability side, it should go if it is given in the trial balance. If it is not in the trial balance, if it is not given in the trial balance, it should go to trading and profit and loss account debit side. Okay, as an addition. For example, salary is there. Okay, and to that salary, let's say there is a salary of 5,000. Another 500 salary is outstanding, still to pay. Salary 5,000, add outstanding salary. That is what the meaning of this, add to the concerned expense. The total of 5,500 is taken in the amount column. Okay, and not only that, you also have to take in the liability of the balance sheet under the list of liabilities as outstanding salary 500. You have to take in the balance sheet. In the profit and loss account, you will add to the concerned expense. Okay, if it is 500, you will add that 500, and the same 500 you will bring to the balance sheet and write under liabilities. Next, number 3, prepaid. Prepaid, you will just do opposite to outstanding treatment. Okay, if you're taking the outstanding on the liabilities, then you take the prepaid on the asset when it is given in the trial balance. Okay, if it is not given in the trial balance, then what you do? You will deduct from that concerned expense deduct from that concern expense. Let's say prepaid salary or salary paid in advance. 5,000 is the salary. Out of that, 1,000 is paid in advance. Deduct that 1,000 so that the amount comes to 4,000 in the profit and loss account. Now, that 1,000 is again taken into the balance sheet asset side. Okay, this is about prepaid. Prepaid is just opposite to outstanding. Okay, look at this. In case of outstanding, you're taking on liability. In case of prepaid, you're taking on asset. Okay, in case of outstanding, you're adding to the concerned expense. In case of prepaid, you're deducting from concerned expense. Clear?
Sir,
Yes.
sir,
Yes.
how are these prepaid expenses assets, sir?
Prepaid expense is asset. Okay. Look at this. What is prepaid? Paid in advance. If your money is with others, it's an asset. If others' money is with you, that's a liability. Okay. If Shoaib is keeping his 10,000 with you, what is that for you?
Asset.
It's an obligation. This is not your asset. It is an obligation that you have to pay him back at any point of time. That's a liability. Okay. And what is that same 10,000 for Shoaib? His money is with you.
Oh, okay, sir. Then it's for me, it's liability, for him, it's asset.
That's an asset. What he has kept with you is an asset. Okay, for you it is not an asset, it's a liability. You have to pay it. You have an obligation to pay it. An obligation to pay is liability. Okay? Yeah, likewise, when it is paid in advance, your money is with others, right? That is an asset. If your money is with others, it's an asset. If it's others' money which is with you, that's an obligation. When it is an obligation, that's a liability. Outstanding, you're owing to the employees, outstanding salary. It's a liability to be fulfilled, obligation to be fulfilled. Okay, right. Next, income outstanding. Outstanding income. You are supposed to receive the income, but you did not receive the income. If it is given in the trial balance, then what you do is you write that in the balance sheet asset side. You have to receive the income, but it is not received. Income has become due to be received, but that is not received. Take on the assets. But if this income outstanding is not mentioned in the trial balance, then what do? You will be adding to the concerned income, outstanding income. Then take on the asset side. Opposite to outstanding income is income received in advance. If it is appearing in the trial balance, it's a liability. If it is not appearing, then it is a deduction from the concerned income and a liability. Okay, so this income received in advance is opposite to income outstanding. Next, bad debt. If bad debt is given in the trial balance, it is simply debit of the profit and loss account. If it is not in the trial balance but is given as an additional information, then it is debited to the profit and loss account, as well as it is taken on the asset side as deduction from the debtors. Deduction from the debtors. Okay. Now, likewise, provision for bad debts. If it is given in the trial balance only, not outside, then debit to the profit and loss account only. If it is not given in the trial balance, but outside the trial balance as an additional information, debit to profit and loss account, and it is taken on the asset side as a deduction from the debtors after deducting the bad debts. First, deduct the bad debts, then afterwards deduct the provision for bad debts, right? So let's say it is like this. If the debtors are 50,000, bad debts in that 50,000 of 5,000, okay, deducted 5,000, and then your debtors, net debtors will come 45,000. There is a provision for bad debts, provision for bad and doubtful debts, another one. So that is to be deducted. Another 5, let's say 10%. 10% of again 50,000 is 5,000. Another 5,000 is deducted. So the net amount of debtors is 40,000. It is like that. Okay. Provision for discount on debtors. Okay. And this is, if it is given only in trial balance, it's a deduction from the debtors. Okay. If it is given outside the trial balance, it is debit to the profit and loss account and taken on the asset side of the balance sheet as a deduction from debtors after providing for provision for doubtful and bad debts. Okay. Next, depreciation. Depreciation. What is this depreciation? If it is, you have already discussed it exhaustively. Now, this depreciation, if it is given only in the trial balance, debit to profit and loss account, that's it. But if it is not in trial balance, but outside trial balance, debit to the profit and loss account, and also take on the asset side as a deduction from the respective asset. If it is depreciation on asset, deduct depreciation on machine, deduct from machine. If it is a depreciation on furniture, deduct from furniture. Okay. Now, interest on capital. If it is given in the trial balance, it's a debit to profit and loss account. But if it is given as an additional information, debit to profit and loss account. Okay. And also taken on the liability side as an addition to the capital. Next, interest on drawings. If it is given only on the trial balance, then it is taken on the credit side of the profit and loss account. But if it is given as an additional information, then you will take on the credit side of the profit and loss account and on the liability side of the balance sheet as a deduction from the capital. Now, loss by fire, if it is given in the trial balance, simply debit to the profit and loss account. There ends the matter. But if it is not given in the trial balance, but as an additional information, you have to take it on the credit side of the trading account, okay, with full amount of loss, okay, and debit to the profit and loss account, okay, with actual loss. Then take it on the asset side of the balance sheet, okay. If you have any insurance claim, that has to be deducted. After taking that deduction, whatever net is available, that you take on the balance sheet. Next, goods withdrawn for personal use. This is a drawing right on the trading account credit side. If it is in the trial balance, it is not there in the trial balance for adventure, then you will take it on the credit side of the trading account, deduct from the purchases, drawings. We have already seen it in the previous class. Then the same thing in balance sheet, you will take on the liability side as a deduction from the capital as drawings, Okay. Next, goods distributed as free samples. You will take only on the debit side of the profit and loss account if it is given on the trial balance. If it is not given in the trial balance, then you will take it on the credit side as a deduction from the purchases. Okay. And also you will take on the profit and loss account debit side. Next is sale of goods on approval basis. Okay. If you did not receive the approval, then if it is given in the trial balance, it is, I'm sorry, this is generally not appearing on the trial balance because this is an additional information. Then in that case, you will take on the credit side of the trading account, this particular item, and this is a deduction from the sales. Okay, and remember that you will take that at cost price. Okay, and the same is taken on the balance sheet on the asset side as a deduction from the debtors. Okay, the selling price of such sales, and show the cost price of such sales along with the closing stock. So this is the crux of all the adjustments that you come across in the preparation of profit and loss account. Okay, now you will be given trial balance generally, and below trial balance there will be additional information given. Okay, so those additional items are these, right? These are the additional items. Okay, now we will have a small exercise.